Stan Sharmu from IG Markets in Melbourne. Stan, what do you make of it? Given the lead from the street wasn't fantastic, but our loss is actually worse than the lead served up.
Yeah, absolutely, Carson. It does seem like obviously investors are quite disappointed that risk assets didn't quite receive that shot in the arm that everyone was expecting. Like you were saying before, ECB President Mario Draghi had overpromised and to some extent under-delivered there. And we could see that throughout the risk space. Obviously, the euro-dollar managed to spike up to 124 leading up to the announcement and dropped all the way back to 121. And we saw similar moves across most of the risk space, including the Aussie dollar, and as well some of the big equity bourses, particularly in Europe, were trading higher, only to turn lower, erase gains. And
the irony is, Stan, the irony is that you got the Fed chief just hours before, who arguably has more tools at his disposal to move, effectively reminding markets that it's as much a fiscal as a monetary crisis. Now, if off the back of that, you saw markets expect something nuclear, they've got rocks in their heads, don't they?
Yeah, absolutely. I mean, it does seem like everyone was getting way ahead of themselves, and we had absolutely set ourselves up for some sort of disappointment. And as well, if you look at the situation whereby Germany is not completely on board with what's currently happening, then it makes the whole situation that much harder.
Stan, let's look ahead. Let's look to the composite coming online today. Some direction for our market as much as anything. We saw some moves overnight there. Brokerage fees on domestic securities being slashed. Is any of that policy likely to positively impact the regional performance today?
I don't think so. It does seem like everyone's solely focused on the macroeconomic issues, particularly from Europe. Obviously, going into this week, into today's session, we're actually up about 1.4% for the week. And now we're just over flat. I think maybe up about 10 points last time I checked. So that is quite disappointing, considering we had set ourselves up for a pretty good week. But obviously, considering the fuel for the gains was mainly on some sort of action from Draghi being anticipated, then it's not too surprising, really. And it ended up being a bit of a binary event for the market.
Expectations for non-farm payrolls tonight. Again, maybe a sense of optimism is starting to come into play that on that key measure, we might be pleasantly surprised.
Yeah, well, it could be. I mean, obviously, we're expecting about 100,000 read, but any figure significantly below or significantly higher could be construed as positive buy markets. If it's significantly lower, then maybe it does mean Fed Chief Ben Bernanke has to come out and act in September. Obviously, he's given himself or bought himself about 2 months there just to assess the data a little bit further and see if it's necessary for him to step in. Other than that, if it's in line, we probably won't see much of a change in sentiment.
Any sense on Eurozone retail sales? Getting a print on that tonight, alongside that some services sector PMI. What's the trend?
Yeah, well, the data, I mean, obviously, earlier in the week we saw Italian and Spanish PMI slightly better than expected, but it does seem like the data over there isn't going to make much of a difference. We still have the main issue of whether a big country like Spain is going to have to ask for a full bailout, and that in combination with Mario Draghi's plan to get the governments involved and buy some of these sovereign bonds will probably get all the focus tonight.
Stan, let's turn our attention to some stocks on the move today. Specifically, let's look at BHP, shall we? Because, coming out with news on its shale gas assets, write-downs there, already people saying, no, look, those impairments are at the bottom end of forecasts, so maybe the selling's slightly a tad over the top. What's your view?
Yeah, it's probably a combination of that. I mean, obviously they had flagged a bit of a bigger than that expectation on the downgrade there, but I think it is combining with the weakness we saw across the commodities space. Obviously, the commodities came back in line with most risk assets, and that's really weighed on the whole sector. Even if you look at Rio and Fortescue, they've had some pretty negative moves as well.
Any sense as well on the resignation of Brian McNamee when it comes to CSL, a key driver of that stock? Now questions, inevitably it would seem, this is all in line with what is often, after all, just a continuation of moves and tide companies to regenerate. But have you got a sense on how the market's handling that one?
Oh, it's been a pretty solid stock over the past few weeks. I think it's actually outperformed most of the stocks in the local index. So I don't think, I mean, for the short term, it'll probably be a little bit of an issue, but I don't think for the long term it affects their business plan at all. And it does seem like with stocks like that have such defensive earnings, it really is hard to derail their move. And we will probably continue to see it hold at those highs that we've seen over the past few weeks. I think the focus in the healthcare sector today was probably more of ResMed. Obviously, they had pretty good earnings this morning. Most analysts were expecting an EPS of about 48 cents. They came in at about 53, so that was quite a solid beat on the expectations side of things. As well, we have heard from some of the brokers come out and say the result was very, very good. Going forward, we actually have some revising their earnings to a double-digit growth going into FY13. So that's definitely the stock to look out for in the sector today.
Stan, thank you so much. Let's talk soon. Many thanks.
Thanks, Carson.
All right. Stan